Hi, this is James Stroke at Westpac with the end of day report from London for Thursday, August the 30th. It's a down day on equity markets too, with Asian economic data pointing to weakness there. We had figures, concerns about China, some figures I think out of Japan on retail sales, some GDP numbers for Korea, adding to the sense that not just the Western world is struggling, but the developing world is also losing some momentum, and more than expected. Those concerns were added to by European data, which included the Economic Sentiment Index for August, which fell to a new cycle low. It's back around the levels it was running at the end of 2008. When of course the European economy was in quite a deep recession. Now, it wasn't really a surprise because we already had the consumer confidence component of that, which was the main driver of the latest fall, and that the advanced consumer confidence report for Europe had reported quite a decline, but nevertheless it added to the negative vibe. German unemployment rose 9,000, fifth straight rise. The last time we saw 5 rises in a row in German joblessness was in late 2008, 2009, when the German economy was in deep recession. In the US, we had the core PCE deflator, which is a measure, in fact the Fed's preferred measure of inflation. It was flat, or zero, in July. The annual rate there was 1.6%, down from 1.8. That's the slowest pace so far this year. Certainly something the Fed will be very comfortable with, and the trajectory is like that now. So maybe even a bit concerned that inflation might be falling a bit too far. That report showed subdued personal income growth of just 0.3%, and although spending was up 0.4%, personal spending, the fastest since February, it's actually the first rise in the monthly spending data since April. It's either been flat or negative since then, so until the July numbers. So the underlying spending story is pretty soft as well. Initial jobless claims, which tell you about the people being laid off, they were steady at 374,000 in the latest week, ended 28th of August, but the previous week was revised up. And that's just above the midpoint of the range that we've seen for claims so far this year, and consistent with a bit of a deterioration in the labour market since February and March. The other main points to make, the Kansas City Fed, their factory survey rose from 5 to 8. Now, of the 5 Fed factory surveys that we look at, district ones, it's the only one that hasn't turned sub-zero yet this year. It's also the least watched. But everyone's watching Ben Bernanke, aren't they, or waiting for him? He's going to speak at Jackson Hole tomorrow. I think there's a growing realisation that he's not the kind of guy to preempt what the Fed's going to say on what the Federal Reserve FOMC will say on September 12-13 after their meeting, given that there seems to be such a wide range of opinions on the FOMC about what's appropriate. So anyone who thinks they're going to get a hint about QE3, being just around the corner, I think might be disappointed. And that seems to be what's worrying markets today as well. So to give you some numbers, the FTSE down 0.4%, miners leading the way there. The French market down 1%, the Germans off 1.6%, the Spanish market down 1.5%, and the Italian market off 1.1% today. The Dow in the US is currently down almost 0.75% at 13,015. Commodity markets are mostly negative, with the oil price down another 1% today, $94.55 a barrel. Gold's off 1/3% at $1,657 an ounce, and copper is the exception that proves the rule, up 0.1%, 345 cents a pound. Aussie dollar, it's at 1.029. It's been drifting down in this global growth concern environment, and we've got some credit figures out today from the Reserve Bank in Australia to provide a bit of local direction. Yeah, so the Aussie below 103 again. Okay, that's it for today. Back tomorrow with some quick wrap on Ben Bernanke, of course.